Good morning, everybody. Happy Friday, and welcome back to Beat the Bell, presented by Kane Capital. We are ready to go. Hopefully, you guys all have had an awesome trading week. Yesterday was something else. One of the craziest, strongest intraday rallies that we've seen in quite a bit. Now, we've been getting these rallies, but most of them are either multi-day or, we'll trade 30, 40 points higher in a single session. Yesterday, off of the 43.90 lows, we rallied about 80 points, 90 points. It's an incredible move, guys. And hopefully you all were able to take advantage of it. I know that we were. There was a lot of good trading to be had, but that's in the past. Now it's time to look forward. Let's bring on today's panel, starting with Diamond Trades. Diamond, good morning.
What's going on? I'm excited to close out a solid week. Let's get after it.
Beautiful. And Ramsay Rippers. Nice haircut there, brother.
Thank you, my man. Had to switch it up a little bit.
Yeah, well, you're down in Miami now, so you had to get the skin fade.
Yep. We needed to do it, man.
Quick adjustment.
When you get out of Philadelphia, you feel a little bit differently. Everything changes.
All right, Diamond Trades manning the ship solo this morning. Fed forecast. What do we got?
I'm muted. Let's start with the economic calendar for today. So fairly light day, but we do have UMISH at 10 o'clock, which will definitely move markets. We had a couple of Fed speakers before the open, but UMISH consumer sentiment and inflation expectations both expected at 10 o'clock. So we'll see how those come in. And then the rest of the day should be pretty much smooth sailing into the 3-day weekend. Market is closed on Monday as America celebrates Juneteenth. So Wednesday, we had the FOMC meeting. And after 2 days of deliberation, the FOMC announced on Wednesday that they would leave the federal funds interest rate unchanged at 5 to 5.25 for the month of June, ending a streak of 10 consecutive hikes that dated back to basically March of 2022. So the Fed has been raising at every single meeting since March of 2022. This is the first time that they haven't raised. They decided to pause at this meeting and leave the interest rates unchanged. My call sheet bet got absolutely wrecked. I'm gonna have to get them back at a later date. While the FOMC didn't raise rates at this meeting, Jerome Powell did allude to the Fed's willingness to resume rate hike increases should the economy and inflation cease to cool going forward. And so 12 Fed participants actually favored 2 additional hikes before the end of the year. So 12 out of 18 Fed participants, even though they decided to not raise at this meeting, 12 out of 18 participants see them raising at least 2 more times before the end of the year, which would bring that FOMC rate up to about 5.5 to 5.75 from the current 5 to 5.25. So that's definitely a stark change from what they were anticipating previously. Previously, the majority of Fed officials had rates basically where we are right now, 5 to 5.25. But they have more or less all in unison raised their targets for the end of the year for the federal funds rate. The Fed fights inflation by slowing the economy through raising rates, which causes tighter financial conditions such as higher borrowing costs, lower stock prices, and a stronger dollar. Part of the reason the Fed decided to halt rates for the time being is related to the banking crisis that we saw back in March, right? According to the Fed, Chair Powell said, we don't know the full extent of the consequences of the banking turmoil that we've seen. It would be too early to see those. So it does seem like they wanted to go a bit slower as they are getting close to their, ultimate goal of reducing inflation. They've seen some progress there, but he definitely wanted to send a clear message to the markets that, look, even though we are pausing at this meeting, the job is not finished, right? The job is not done. And we have to continue to be aggressive on the rate front if we are going to ultimately get that inflation down to where they want to see it. Given the FOMC's projections, the federal funds futures market is no longer pricing in rate cuts by the end of the year. If you guys remember, this entire year we've been talking about how the market is basically calling the Fed's bluff, saying, early in the year, the Fed's position was, look, we're going to keep rates elevated through the end of the year. We're not going to lower them. And the market was saying, well, look, something's going to happen at some point this year that's going to force your guys' hand and make you guys cut rates by the end of the year. The market is no longer pricing that in. After seeing how aggressive so many of the Fed members were yesterday, with a lot of them even seeing rates going higher than we are right now, which I don't think was a consensus, up to a month ago. I think that that's definitely probably the biggest change to come out of this FOMC meeting is the market no longer pricing in rate cuts by the end of this year. So the market is no longer calling the Fed's bluff on, keeping rates elevated throughout the rest of 2023 and into 2024. The probability for a 25 basis point rate increase at the July meeting rose to 72%. So the market believes that, there's basically a 3 in 4 chance that they're going to raise rates at the next meeting after pausing at this meeting. That's exactly what the Canadian Central Bank did. If you guys remember, they paused and then they resumed their rate hike campaign. The market believes that is what the Fed is going to do at a 72% probability interval. That's up from just 50% a week ago and up from about 13% 1 month ago. So as you can see, the market is starting to change their expectations around what Jerome Powell and the Fed is going to do with these interest rates. Globally, the ECB also raised by 25 basis points, and the Bank of Japan left rates unchanged following our Fed's policy actions. But that is going to be a wrap for what happened this week with the FOMC and what we're going to pay attention to going forward. I will pass it back to Alejandro.
Oh, thank you, sir. Time to take a look at the S&P, taking a look at the system. Does it get any more beautiful than this? This red 30-minute candle was, of course, the FOMC sell-off that came after 2 p.m. We got that initial dip after the interest rate decision, but where did we bounce? Right at the 50 SMA on the system, just beautiful. Okay, so what does that mean? It means that the uptrend that we've been talking about, where we're trading above the 50 SMA on the 30-minute and 1 hour chart, is still perfectly intact. And then, of course, yesterday we saw one of the strongest rallies that we've seen intraday all year. And so very important to be referencing this chart, keeping in mind that we are still trading above both the 50 SMAs on both of our two important time frames, the 30-minute and 1 hour SPX charts. And so keeping that in mind, understanding that bulls are in control and that bears do not have a real shot to sell it off until we break back down below the 50 SMA on both the charts. Okay, guys, so that is the clear as day trend. I hope that everybody has had the system pulled up, checking it daily, keeping it in the back of their mind, helping you to understand that your odds are better going long than going short for as long as this trend remains strong. Okay, that's going to do it for the system. We're going to cover some ES trading later on in the show. But for now, we're going to pass it over to Ramsay Rippers, who has bet the bell for us.
Do it for the system. I'm going to pass it over now to Ramsay Rippers for Bet the Bell. Good morning.
Good morning, guys. Good morning. Ready to go. My bad. Little conundrum with the dog, but we're here. We're ready to go. Ryan, pull up the stats. We've had like 4 straight green days. What do we got? Back in the lead. Look at this. Literally a 3-way tie for first place. Pretty incredible. If you ask
that's
me.
crazy.
It's a shame. Man,
first.
I mean, that's like not a tie. No. This is so fucking stupid. On what? How is a guy with 33 wins in the same conversation as a guy with 42? It doesn't make any sense.
Yeah, I mean, that's fair.
Think about how they do it in baseball. The team with the more wins gets the edge, even if there's a tie.
Okay, dude, you're in first. Like you're acting like like screwed you. You're in first place. Like, what are you complaining about?
One of these days I'm gonna wake up and Money Mander, who comes to like 1 in every 10 beat the bells, is gonna be in first place. I'm not gonna be happy about it. Anyways,
let's go. Let's do it. Green or red today? What do you got, Diamond?
Hey, they always make me go first. I'll go. Gotta go green, I guess, dude. I mean, what else are you supposed to say?
I am going green.
All right, so I got a surprise question. On Wednesday morning, I believe, if I checked correctly, I asked, where do you guys think we close this week? I believe both of you guys are pretty well in the green. No, I think that you said Tuesday's highs, which were like 43.
Whatever I said, we blew through it. So.
Yeah, it was the level that we were trading at like that morning.
It was like 15 points overhead. Hondo, you said 4,400. It's looking pretty solid. We tapped almost 4,440 yesterday. What do we got today? Where are we closing? Over or at today?
Oh God. I could see them pinning around 445. Today's OPEX, so I don't think that we will get a crazy move like yesterday. But I'll say we close over 444.
So you're talking about SPY 444.
Yeah.
Wow. I mean, that would be a rip. Noah.
I'll say under 445. Sandwich in between. Under 445. I don't think that we have a ridiculous up day.
What do we think about that? Under Hondo, what are you laughing at?
I don't know, dude. It's just funny to me.
Yeah, what's Hondo giggling about over there?
I think what he's giggling at is that we're trading
under 445. Like, all right, dude. Like 30 points out of the money.
What do you mean?
Whatever. Continue. Let's get to the next question.
Right,
the next question is absolutely it's even more ridiculous.
Last question. Another unusual trading scenario as far as insiders. So Senator Thomas Tuberville, never heard of this guy, but he sits on the Committee of Agriculture, Nutrition, and Forestry. Just disclosed he was buying some cattle, corn, and soybean futures. He bought 60,000 of them in May. They're now at all-time highs. He's up at least 15 to 20%, according to where futures are opening this morning. The guy. So look, it would be a little bit different, I guess, if he bought some Apple, maybe some Nvidia, like the rest of his colleagues, the Pelosi's, the incredible Congress traders. He's in the agriculture, the nutrition, and the forestry sector, and he bought some cattle. Cattle's ripping. Unusual, not unusual, coincidence. What do you guys think? It's just another great trade.
I mean, look, I'll say if you look at a chart of cattle futures, it's like you should have thrown the chart up there, to be honest. I mean, it's been on a ripper.
Nobody has any idea what you're talking about, dude.
All right. Well, it's been on a ripper since October 2022. Like, it's literally just going straight up. Like, it's vertical. So, like, the fact that he bought it a month ago and made 15%, the thing's up like 60, 70, 80% off lows. Like, I don't think it's that unusual. I do understand the point of not trading things on the committee that you sit on. Don't get me wrong. I'm not for that, in any sense. I think it's kind of stupid. But this particular one, it's like, thing was going to rip regardless. I think
15% really isn't much in a month.
I think it's more the principle, like, you sit on the committee and you're trading the direct futures of it. I get it. Like, I don't think that should be a thing. But this particular one, if you look at it, I'll actually send one to Ryan and I'll see if we can get it up here. But I mean, the thing is just he bought an uptrend. The thing's going up. It's been going up for several months. It's actually been at all-time highs. That's why that tweet is a little bit misleading. Yeah, look at the chart. I mean,
okay. I mean, he got a good buy in May.
Yeah, I mean, look, he bought the dip. I guess. Yeah.
Hondo.
I'm in agreement with Diamond Trades on this one.
Yeah, I think that's fair. I think that's fair. Alrighty, guys, that's going to do it for Bet the Bell. We'll pass it back to Hondo here.
All right, awesome. The last thing that we're going to do is trade of the week.
It's time for America's Trade of the Week.
Now, here's a guy who knows how to trade stocks.
Okay, so this was a trade that I took yesterday, long from 44.04 MES, and still in this trade, currently trading at 44.81. But I want to just kind of go through and cover what I was looking at, why I entered, and how I managed it. So we got a pretty clear false breakdown here. So around that 4,000 level, you can see, and Ryan, if you want to make the chart a little bit bigger, you can see how we dipped below 4,000. Okay, we wicked down. We got that one red candle. You see the one red wick. And then we come back up. We reclaim 4,000. Okay, so that was a key level of support that I had coming into the day. And we had slowly been trading down overnight. And you have to think about it. For these big runs to occur, for these pushes higher to occur, the market has to come down and it has to create liquidity. Okay, and how it does that is it's going to come down. It's going to stop out all the longs that had their stops at under 4,000. Okay, it's going to squeeze. Oh, excuse me. Yes, 4,400. I keep saying 4,000. 4,400. It's going to come down. It's going to grab the stops under 4,400 for everybody that was long. Okay, it's going to trap shorts who are now trying to short the break of 4,400 because obviously that looks bearish. But then what we see is we see this wick down and then a quick reclaim of that level. And that's just a false breakdown. And that is a great opportunity to get long. And as you can see there, there was amazing follow through on this trade. Never expect a move of this caliber anytime I enter a trade. But what I did was I took profits at first resistance, the majority of my profits at first resistance, and then I took more off at second resistance. And then it was just time to trail my stop. And the yellow lines I have put there because that is where I had moved my stop intraday. Okay. And as you can see there, it's just where ES finds support on this 15-minute chart. And so as ES makes a swing low, it finds some support. I simply trail the stop up. And that is why I'm still in this trade, because it has not broken 48.60 support and appears to be basing, looking for another move higher if we can crack yesterday high a day. But the main story here is looking for those traps to get long, and also on the flip side, looking for those traps where we get those fake breakouts to get short. Those are really solid entries. Okay. So that's how we traded yesterday. It was obviously a really good day. It's been an awesome week. Hopefully you guys have been crushing it as well. There was definitely a lot of opportunity, and it was good to maneuver through what was a pretty volatile week with CPI and FOMC. But that's going to do it for this morning's show. Appreciate everybody that tuned in. You guys are the best. If you're watching on YouTube, do us a favor, like and subscribe. If you're watching on Twitter, like the tweet. Always appreciate you guys who are tuning in on the daily and on the regular. There will not be any Beat the Bell on Monday because the market is closed. So we'll see you guys back here on Wednesday morning at 8:30 a.m. Eastern time. And the last thing I'll say is that we will be trading live all day, as we do every day, in the King Capital Discord. Ryan just put the QR code there. You can sign up. You can scan it to go sign up. We've got a 7-day free trial, or you can just go to king-capital.com. But have an awesome weekend, everybody. And we will see you guys on Wednesday morning at 8:30 a.m. Eastern.